Hi, good week to all. This is Kelvin here again. Welcome to this week latest edition of our weekly technical outlook on the major stock indices. So as usual, I'll be covering the latest medium-term trend bias. That means talk about 1 to 3 week trend bias, as well as the updated key levels to watch on the SPX 500, the NASDAQ 100, the Hong Kong 50, the Japan 225, and the German 40 stock indices for this week of 22nd of November to 26th of November. So before we start, let's take a look at the disclaimer slides. All right. So right before we start, let's take a look at the raw momentum analysis, as usual, that actually occurred last week across the globe. All right. So what we do is that we break down last week performance, its prior week performance, and the prior 4 week average to get the difference between last week performance and the prior 4 week average to have a gauge of the raw momentum analysis. So as you know that what most traders concern right now is, can our expected bullish bias that we highlighted last week continue for the major stock indices that we covered? Why? Because given that right now in Europe, there is actually a resurgence of these COVID-19 infection cases, which led to potentially lockdown in more parts of the European continent. So as you know that Austria itself has really started a full lockdown starting from today, and Germany start to see its cases start to rise pretty significantly in the last 3 to 4 weeks, which may also contemplate to actually start to have more stringent uh, containment measures, which could eventually, number one, hamper economic activities going forward. So before we jump into the technical chart to actually better gauge on the sentiment towards this particular latest set of macro, we call it negative macro, we call it events that is related to the pandemic COVID-19 spread that is increasingly being seen right now in the European. Does it translate to a change in the technical picture? That's the biggest question that most traders have in mind. So a quick run through what happened last week is that we start to see a very strong outperformance in the NASDAQ 100, especially to the later part of it. So that actually corresponds to the rise in these COVID-19 cases in Europe. Why? Because as you know that COVID-19 cases rise has a very negative impact on cyclical stocks for sure. All right. So what we could see over here is a renewed build-up in those technology stocks that tends to be more defensive during period of increases in COVID-19 cases as seen in the past, in the last 1 year or so, on the average. So you see a very strong outperformance in Nasdaq 100 that is heavily concentrated in the tech space itself. So 2.31% versus last week performance on negative 96%. Negative 0.97%, pardon me. So we see the difference, a jump in the in momentum of 0.6. So that's actually positive for the Nasdaq 100. But what we could see over here is that the one that is start to actually underperform is the Dow Jones Industrial Average, down negative 1.38% in terms of momentum, negative 2%. The worst performance was actually the Russell 2000, which is considered as a cyclical play as well, being a small cap stocks, negative 2.84%. And for the momentum, the difference between the last week performance and its prior 4 week average is at negative 4.5%. So what we could see over here is a bit of distortion, okay, where the cyclical and small cap space, or the value space, starts to actually underperform, while the technology space starts to actually outperform. So that's actually why you see the S&P 500 is kind of almost unchanged last week. Why? Because the top three stocks actually is actually Microsoft, Apple, and as well as Amazon, which is actually considered as a technology play that managed to actually keep it alive, rather than having a very drastic change in last week performance. Okay, so in terms of Hang Seng wise, down a bit from last week, negative 1.10%. Hang Seng Tech Index negative 1.64%. This is actually primarily due to this number one, this poor showing of Alibaba. But however, not all Chinese tech stock actually suffered the same fate at Alibaba. So in fact, you start to see NetEase performance was actually quite good, which is one of the major tech stock as well. What's surprising is JD.com, which is we call it the rival of Alibaba, also did quite well. In fact, technically, I featured JD.com as my chart of the week for this week. Later, I'll show you where to actually find my stuff on social media. Okay, so you have Nikkei 225, up slightly at 0.46%. The German next, yes, despite late last week, we call it sell off due or late Friday sell off due to this impact on the spread of COVID-19 cases in Europe. It actually still remains positive for the week at 0.41%. All right. So now, very quickly, let's take a look at the S&P performance for last week. So we could see over here is the information technology is performing superly well against the S&P index by way a significant margin, plus 2.34%. Then also the consumer discretionary thanks to Tesla, because Tesla has a huge weightings inside, also up by 3.81%. So what we could see over here is that at the bottom of the table is those value and cyclical play that's pretty hit by this resurgence of COVID-19 cases in Europe. You start to see the industrial down negative 1.2%, materials negative 2, financials negative 2.82, and energy negative 5. But like you say over here, we couldn't come to a place that where, yes, we have one bunch of technology play that is still outperforming, but we could see a switch, a kind of divergence where technology is outperforming, but the rest of the world will start to sell off. So perhaps what we could see now is that the cyclical play might be more sideways movement rather than a strong surge as compared to the technology stocks in terms of trend. Now we're talking about trend rather than single day movement. Okay, now very quickly, let's jump quickly to the technical charts of the various indices that I like to cover as usual on a weekly basis. Okay, let's go on to CMC platform. So let's quickly jump on to the first one I want to touch is the SPX 500. So what we could see over here is, firstly, let's take a look at the key levels. The key higher level is at 47,070, which is about to reach as well, and 4970/90 in a longer term basis. So in terms of trend wise, still in the uptrend. Okay, so what we're talking about, this is a major up. We're talking about the major uptrend starting from the low of March 2020 is still pretty intact. There's no clear signs of a topping configuration that we see so far. And the medium-term trend, that means talking about from the recent low of 1st of October, is also pretty intact. Why? If you look at the RSI still hovering above the support line, the pullback support line at the 62% level, which is was actually the former resistance, thus the pullback support, and hasn't actually reached the extreme overbought level yet at 73%. So all in all, I could say that number one, major uptrend is still intact together with the medium-term uptrend. Okay, so what we have last week is pretty much unchanged. So last week we are still looking at a push up towards 47, 45 potentially /70, which is the recent level I highlighted on the daily chart. Above this level should take us a bit higher to 48 figure /48,020. So last week it printed a high of 47.25. Okay, almost reached about 47.45. So all in all, right, what we could see is that it's still trading inside this very short-term ascending channel, holding above the upper boundary of this channel above the medium line or the median line, acting as an intermediate support at 47.70. So last week we have a key medium-term pivotal support at 46.25. So everything is still pretty much unchanged. So I don't want to tighten the key medium-term pivotal support by so much to 47.70, 46.70. So it remains it at 46.25. So as long as 46.25 holds, potentially we could see further potential up move to actually test 47, 45, 70s. Then thereafter a break above should take us to 48 figure, 48.20. And RSI on the shorter term is pretty healthy as well, tracing a series of latest year of higher low, holding above this key corresponding ascending support at around the 39% level. All right, but nevertheless, if we see a 4-hour close below 46.25, then we could see a kind of a minor corrective pullback to actually test the lower boundary of this channel, which is I think a support at 45.40, which is also the former swing high area of 3rd of September. Okay, now moving on to the outperformer, which is among the US indices, will be the NASDAQ 100. So I could say that NASDAQ 100 also pretty same configuration. Major uptrend from the low of March 2020 still remains intact. No signs of a toppish configuration as you could see the latest price action. Similar on the medium-term time frame from the low of 4th of October. That means talking about the medium-term trend still also pretty much intact. A series of higher high, okay, and higher low. Right, so if you look at the RSI is still holding above a key corresponding support as I drawn over here ever since it starts to bounce off from the oversold level. And right now, yes, it's overbought, but it hasn't reached the extreme overbought level at around the 80% in the past, where we could see in the on the start of 24th of December, where we may see a bit of pullback to take shape previously. Okay, so it hasn't hit that level yet. And most importantly, it doesn't show any signs of bearish divergence, clear sign of bearish divergence at all at this juncture. So all in all, I could say that we're still maintaining that bullish momentum the first resistance to watch will be 16,630/845. Okay. Then going on to the strategy chart for the 4-hour chart. So last week we have we call it first resistance zone, which is 16,000 uh, 16,630 slash 16,845. So you look at Friday's high at 16,333, which is almost reached the 16,000. It may hit the 16,630 lower boundary of this resistance target. So what we do over here is that we still see no signs of exhaustion yet. So looking towards the test the upper boundary, which is the top of this channel here, 16,845, then we could potentially see a further push up extension of this wave 3 move towards 17,050 slash 17,185, which is the cluster level. All right. So all in all, right, what we could do over here is that I actually tighten the pivot slightly towards the median line of this short-term ascending channel at 16,090 level. So also this 16,090 level, if I were to draw a Fibo retracement, is actually the 23.6% Fibo retracement of this entire short-term uptrend that is in place since 4th of October, or medium-term uptrend that is in place since the 4th of October 2021 low at the 23.6% as well, confluencing at that level. So definitely this is a key level to actually watch in terms of a weekly perspective or medium-term perspective to maintain this ongoing uptrend, impulsive uptrend that is still in place since the low of 4th of October. So what we could see over here is, yes, despite these COVID-19 cases in Europe, it hasn't actually damaged the technical picture of the NASDAQ 100 and the SPX 500 yet. So we could not actually turn outright bearish on that because there is no signs of technical deterioration as being seen in this technical charts of the NASDAQ 100 and SPX. Okay, so what we could do over here is, yeah, we still tighten the pivot and we take things one step at a time. Okay, so definitely if you see a 4-hour close below 1690, all the bullish buyers view will be invalidated to see a corrective pullback at least for between 1 to 3 weeks to actually test the next support at this 15,700, 15,520, which is the ascending channel of this short-term channel that is in place since 4th of October and also the former swing high area of 6th of September. Okay. Now moving on to Hang Seng, which is still pretty much trapped inside this range bound configuration. So what we could see Hang Seng over here now is actually forming a kind of a short-term, medium-term base. Why? Because if you look at the from the low of 27th of July to 4th of October and to this last higher low, actually forming a kind of a inverse head and shoulder formation. So what we have in a couple of weeks that 24,550 is still the key medium-term pivotal support. So we are still looking for a potential push up. So in the first step to actually test this resistance level, which is at the 25,820, also drawn from the descending trend line from the high of 11th August. So if prices can't break this level, it could just be another sideways range for this week again between like same like almost the same like last week, right? Sort of push up, but thereafter it can't go much further and it start to pull back down again. So now potentially it still has a chance to actually shape a push up, at least in first step towards 25,820. Why? Because if you look at the 4-hour RSI has turned positive after a bounce off from the oversold level and as well as this significant ascending support that I draw from the low of 4th of October, which correspond to this low as well, the inverse head and shoulder low. So all in all, right, we could see at least in first step a bounce back to retest 25,820 potentially. Definitely going to see a break above this level before hitting up the medium-term range resistance that is in place since the high of 12th of August, which is at 26,440 slash 26,750. So all in all, it's still trading within this kind of descending, expanding wedge configuration since its 52-week high of 31,114 over here. So we're still taking things one step at a time. So watch this level, okay, for this week, 24,550. So if we start to see a 4-hour close, definitely we see another steeper pullback, a very messy choppy decline to retest the long-term key pivotal support at 24,000 slash 23,500. Why this level is a key long-term support? A quick recap again on the weekly chart. Okay, so a picture paints 1,000 words, so that's pretty self-explanatory why this level is key, because it managed to help reverse a steep decline since the great financial crisis low as drawn from this ascending trend line support from here. All right. Okay, now moving on next will be the Nikkei 225 or the Japan 225. Okay, so go on to the indices tab number 2. So if we go to this Japan 225, it's also a very similar story, still kind of trapped inside this sideways range since previously hitting a 52-week high, or not 51, close to about yeah, 20 or 30-year high at 30,716 level. So now it's trying to actually inch back up to retest this level again at 30,716. 13,716, pardon me. So what we could see is the RSI is actually pretty much positive as well. Why? Because it starts to shape a series of higher low. Okay, so we could draw actually a upwards, a potential upwards uh, trend line as well. If I were to draw it from here to here, okay. So what we could see over here is that momentum is also kind of positive, at least on from a medium term perspective. So what we could see is actually supporting this potential push up, at least in first step to test the 30,716 level. So going forward to the 4-hour chart, the strategy chart, so pretty much unchanged. Last week we have an intermediate support at 29,500. Key support to actually maintain that bullish potential push up towards the range stop will be at 29,070/60. Picture remains unchanged. Prices push down, test the intermediate support and start to bounce off it. Okay, ever since then. So definitely still maintaining that bullish bias. So the technical picture still remains the same. 4-hour RSI is also very positive, bouncing off from a key ascending support that is in place since 20th of September. All right, it's going to shape a series of minor higher low, as you can see from here. So both daily and 4-hour RSI is actually supporting a potential further push up, as you could see. Okay, so as long as 29,070/60 holds, we still a break above this intermediate range resistance of 29,900 that is capping previous that's capping the previous high of since 4th of November, could potentially take us towards the next resistance at 30,330, followed by the 30-year high, or the 20-year high at this 30,716/30,870. All right. So we're still maintaining that bullish bias within this range configuration, medium-term range configuration of the Japan 225. So nevertheless, if we start to see a break below 29,070/60, we will see a kind of a corrective move, a pullback to retest the support, next support level at 28,400 level. Okay. Now, going on to the one that is kind of sensitive towards the COVID-19 situation in Europe will be the German 40 index. So I could see the German 40 index, right? Yes, despite last week push down, last week's single day drop on Friday, overall, the major uptrend since the low of 19 March 2020 still pretty remains unchanged. It's still intact, you see. Higher high, higher low. No signs of distribution yet. Major distribution like double top being formed, or and what's important is that the RSI is not showing any divergence signal, higher high. And also, uh, yes, it reached the extreme overbought level, but still holding above this ascending trend line support that I dropped. Right, still above this level. So what we could see now over here is the 50 or the 100-day moving average, pardon me, is coming to add a support at 15,800/700 level. So what we could see over here is there is no signs of collapse yet. Yes, maybe what we could see is a bit of subway movement, due to this COVID-19 situation in Europe, but telling us to advocate for a very steep fall, like what we see over here in the last pandemic, the start of the pandemic crisis from February to whatever level, it's not there yet, you see. Because if you monitor carefully over here, what causes this steep fall over here is potentially a divergence, a very clear divergence in the RSI. Okay, you see prices here going higher high, correct? Higher, this high is higher than this high, but the RSI is actually showing similar high at this point. So there's a divergence over here, you see. Before a warning sign that momentum has starts to actually wind off before this steep collapse. So what we could see over here is that this particular RSI behavior in the past is not actually showing up over here yet at this moment in time. All right. So what it could mean is that it could be persistently sticky on the upside for now, potentially. Yeah. So what we could do over here is that let's take a look at the 4-hour strategy chart. Okay. So the 4-hour strategy chart, right? We have last week we have a first resistance of 16,300, followed by 16,420 for 60. So it's already hit 16,300. Then thereafter it start to do that sell off of last Friday. So this sell off actually, where does it stop? It actually stopped right at this ascending channel support drawn for the 6th of October. All right. And if you look at the current medium term uptrend from the low of 6th of October, And if you look at the 4-hour RSI, also bouncing off from a corresponding ascending trend line support level, it seems to be telling us that, hey, the short-term momentum hasn't actually really deteriorated that much, all right, based on last Friday movement. So what we could do is I will actually tighten the key medium-term pivotal support for this week to this previous congestion low, support low at that means from the 4th to 10th of 11th of November from a risk management perspective to 16,000 level, which is so the former swing high area of this 31st of August. All right, why is it important? Because once it hit this level, it starts to do that pullback. Then this level is being taken out, tested, can't break, and make new all-time high. So definitely this is a key level to maintain this medium-term impulsive structure since the low of 6th of October 2021 low. So still maintaining that bullish, we call it a bias scenario, as long as 16,000 level holds for it to retest 16,300, then thereafter looking forward the next push up towards a Fibo cluster level at 16,420/460. So definitely, if we start to see a 4-hour close below 16,400, then we start to see potentially at least 1 to 2 weeks of pullback to retest this next support level, which is the 100-day moving average, as shown on the daily chart itself over here, which is at this zone of 15,800/700, which is so confluence with this former swing high area of 14th of September, 24th of September, and the last one previously from 26th of October. All right. So all in all, what we could see over here is that yes, despite this fear of a renewed, we call it a more stringent lockdown in Europe itself, the technical picture hasn't really changed that much in the indices that I share with you all. Yes, maybe cyclical may start to underperform, but against technology play. But I do not start to see a kind of very significant collapse that what we start to see earlier on in this February 2020 to March 2020 period of that steep fall. So all in all, we are still maintaining that bullish bias as long as those aforementioned key medium-term pivotal support holds. All right. So before we go, I want to share with you all my social media platform where I share market commentary on a daily basis, as well as highlight certain interesting configuration on the market. So you can actually follow me at Twitter. So open a Twitter account is free. So once you open a Twitter account, you just tap at Kelvin SC Wong. So that's my Twitter account. So once you click follow, you on the notification. So as well as I publish any notification, it will be published live over here. So this is what we highlighted earlier on this particular scenario I shared with you all earlier in the day. All right. So with that, thank you much for your time, and I'll see you again in my next video.